Welcome to the Daily Market Recap. Today is Wednesday, July 29th, 2026, and just like that, Wall Street decided to hit the brakes today. Stocks traded under noticeable pressure as investors caught a sudden case of pre-Federal Reserve jitters combined with heavy profit-taking across key tech holdings. Sellers took control early in the session as traders reevaluated valuation multiples ahead of crucial macroeconomic data releases and policy updates. Without a clear catalyst to push risk assets higher, the market drifted lower, proving that Wall Street is currently holding its breath. Taking a look across the sector chart, it was a classic risk-off rotation day. Defensive plays like consumer staples and utilities managed to scrape together small gains as traders parked cash in safer harbors. On the flip side, high beta technology, communication services, and semiconductor stocks took the brunt of today's selling pressure. Energy also slipped alongside softening crude prices, leaving growth bulls with very few places to hide. And where does overall market sentiment stand after all this drama? CNN's Fear and Greed Index has plunged down to 32, locking us firmly in fear territory. Investors are clearly treading lightly right now. Topping our headlines today, semiconductor powerhouse Qualcomm dropped sharply following its latest quarterly financial results. While top-line revenue met expectations, earnings came under pressure due to elevated input costs and ongoing smartphone market friction. More notably, management cautioned about accelerated declines in Apple-related revenues as Apple moves closer to its own in-house modem solutions. Despite doubling its long-term automotive and IoT targets, near-term margin concerns sent the stock tumbling into negative territory. Our second big story centers around macro anxiety. Traders are locked in a holding pattern as all eyes turn toward the Federal Reserve's upcoming policy meeting and interest rate decision. Market participants are desperately hunting for clues on whether rate cuts are imminent or if inflation worries will force central bankers to keep borrowing costs higher for longer. This macroeconomic suspense is causing institutional money to sit on its hands and wait for official guidance. Rounding out our top three stories, earnings season is delivering maximum drama. As big tech heavyweights continue rolling out their scorecard, high expectations are leading to swift punishment for any operational misses or conservative forward guidance. Investors are demanding perfection from mega-cap growth names, and any sign of slowing cloud or AI revenue growth is triggering immediate sell-offs across the broader tech ecosystem.
All right, grab your popcorn because it is time to break down today's biggest winners and absolute train wrecks.
First up, let's celebrate today's green rockets. Huron Consulting Group, HERN, delivered an absolute masterclass performance, rallying hard after crushing earnings estimates and raising guidance. Supply chain management software provider Manhattan Associates, ManH, followed suit with a massive breakout on blowout quarterly metrics. Automotive retailer Lithia Motors, LAD, accelerated higher as robust dealership margins surprised analysts, while XL Service Holdings, EXLS, rounded out our top four with impressive gains fueled by strong enterprise analytics demand. Now for the painful side of the ledger, today's biggest drops. Parsons Corporation, PSN, took a heavy blow as contract timing delays spooked short-term traders. AI-driven insurer Lemonade, LMND, got squeezed tight, sliding as high marketing burn and underwriting losses raised eyebrows. Crypto miner Riot Platforms, RIOT, tumbled hard amidst broader crypto market liquidations and hash rate pressure. And rounding out the bottom four, Qualcomm, QCOM, suffered a rough session as post-earnings. Selling pressure dragged shares down significantly. Looking at the technical chart for the S&P 500 ETF, SPY, bulls are desperately trying to defend the critical support level at $540. If sellers break below $540, the next major downside cushion sits near the 50-day moving average around $532. On the upside, SPY faces immediate overhead resistance at $552, with a secondary target at $558, where previous rallies stalled out. Turning over to the tech-heavy NASDAQ 100 ETF, QQQ, the chart is testing key structural support right around $475. A breakdown below $475 could open the floodgates toward $462. However, if buyers step in to defend this zone, QQQ needs to clear resistance at $488 and $495 to regain medium-term bullish momentum. Finally, small-cap stocks via the Russell 2000 ETF, IWM, are showing interesting resilience. IWM is consolidating just above its primary support zone at $215. If small caps can hold $215, a push toward resistance at 224 Vero looks very plausible. Lose $215 though, and we could easily test $208. Shifting over to the crypto universe. Bitcoin BTC experienced a volatile session, sliding toward the $63,000 level before finding a bit of footing near $63,800. Macro uncertainty and ETF outflow pauses have put a dampener on momentum. BTC is facing stiff resistance at $65,500, while primary support remains firmly anchored between $62,500 and $63,000. Ethereum ETH mirrors Bitcoin's cautious posture, consolidating around $1,910 to $1,920. ETH bulls need to reclaim resistance at $1,970 to reignite an upward trend toward $2,050. On the downside, key support sits at $1,865, a level that must hold to prevent a drop toward $1,800. The broader altcoin space saw mixed results amidst over $500 million in total crypto liquidations today. Select major altcoins like Cardano, ADA, and Uniswap Uni manage notable relief bounces, but total market cap remains locked in a range near $2,019 trillion as traders await macroeconomic clarity. Wrapping things up, overall market sentiment remains highly sensitive and cautious. Tomorrow is going to be huge. Keep your eyes peeled for incoming PCE inflation data, GDP reports, and another massive wave of tech earnings reports that will undoubtedly set the tone for Friday's trading. That's a wrap for today's market recap. If you found this breakdown helpful and entertaining, do me a huge favor. Smash that like button, hit subscribe, and ring that notification bell so you never miss a daily update. Drop a comment down below with your thoughts on today's price action. Thanks for watching, and I'll see you in the next one.